Hi guys, today I'm talking about some Forex trading rules that could guide us in trading Forex just to prevent losses. I put this together just from my years of experience trading Forex. The first rule is about your lot size. You have to make sure that your lot size is commensurate to the amount you've got in your Forex account while trading. Now, before you open a trade, you have to make sure that you make your lot size as low as possible. Because if your lot size is too high, in case the market goes against you, you're going to be in trouble because you're going to lose a lot of money just from a small movement of the market against you. So make sure that your lot size is as low as possible and never take unnecessary risks. Sometimes you get tempted to think, oh, this is a very good trade. Let me go in and just try to make, if it's just 10 pips I could make, 20 pips I could make, but you never know, the market could go against you and you just get into trouble. The next is to make good use of stop loss and take profit. Ensure that you place your stop loss and take profit at very good levels and don't take risks unnecessarily. Make sure that you use a stop loss while trading and use a take profit as well, so that in case there is a sharp reversal, you would have cut out your profit, you would have banked your profit before the reversal occurs. Next is that you must not trade every day. Sometimes you trade and then the following day you spend the whole time watching the market. It's really worth it to watch the market for a whole day and not just gamble with trades. Sometimes you could be waiting for a pattern to form, and while waiting for the pattern to form, probably using a daily chart, and of course on a daily chart, a candle represents a whole day. And sometimes for a pattern to form, you need a couple of candles, and that will take a couple of days to form. So while waiting for the pattern to form before entering, then it requires a lot of patience. It's really worth it. So you wait and let the pattern form properly before you go into a trade. So it's not a must that you trade every day. There's some days that you have to spend the time watching and waiting for patterns to form before trading. The quest to make a lot of money makes people feel, wow, I must trade every day. I just must make money today. And they run into trouble. Only trade when you're sure of your trading decision. You must be very sure of your trading decision. You don't gamble. You don't look at the market and say, wow, okay, just it could go up, it could go down. Okay, and then you just decide mini, money more. Okay, it's going to go up. No, you don't trade that way. You have to be very sure of what you're doing. Next is don't trade randomly. Always have a reason for going into any trade. So when you go into any trade, you should be able to ask yourself a question: why did I go into this trade? And then you should have an answer. And of course, you should have that answer before you go into the trade at all. So don't trade just randomly. Always have a reason for going into any trade. Always pay attention to picking a very good entry point. Your entry point is very important when trading Forex. So if you're using a daily chart, of course, you don't use the daily chart to determine your entry. Use the daily chart to determine the direction or the pattern you want to trade. But when you want to pick a good entry point, then you have to go to the smaller time frames to pick a good entry point. Ensure that the price is probably at a support or close to a support in case you are eyeing a buy trade, or in case you're eyeing a sell trade, and you make sure that the price is at a good resistance on the lower time frames before you go into the trade. Don't be greedy. That's the next point. Don't be greedy. Close your trades whenever you're in good profit. When you go into a trade, you don't just say, wow, I want to make 200 pips on this trade. When you make 50, you close the trade, because you never know, there could be a reversal. So depending on what strategy you use, just make sure that whenever you are in good profit, just lock it in. and don't take unnecessary risks. Always learn to cut your losses. Don't keep believing that a trend will reverse while you watch your account being wiped out. So sometimes you could be looking at your account getting blown off, and then you're just hoping, wow, I hope it's going to reverse. I hope it's going to reverse. Hopes don't move the market. So when you try a strategy, you go into a trade and then you see that probably there's a reversal, you learn to cut your losses. There are always opportunities to make money in the Forex market. So whenever you have a little loss, just take the loss